Welcome to Fab Classes. So today we are here with illustration number 6 from the Departmental Account series of Paper 1 Accountancy in the CA Intermediate syllabus. And let's go into the question. Illustration 6 it is, and page number is 12.17. 12.17 in the Accountancy module 3 from the CA Intermediate syllabus. So the illustration number 6 is what we are going to do in this video. So let's read the question. Department P sells goods to Department S at a profit of 25% on cost. So please make sure that you mark these types of wordings: 25% on cost, 15% on cost, 30% on sales. These wordings should be underlined. It's very important. So Department P sells goods to Department S at a profit of 25% on cost, and to Department Q at a profit of 15% on cost. So P is selling goods to S and Q at respective profits, and the Department S is selling goods to P and Q at their respective profits on sales respectively, and Department Q sells goods to P and S at 20% and 10% profit on cost respectively. So in short, there is interdepartmental transfer between three departments, and that too after taking some amount of profit. It's not, the departmental transfer is not at cost price, it is at the market price or the selling price after adding the profit element. And it's also given that the departmental managers are entitled to 10% commission on net profit, subject to unrealized profit on departmental sales being eliminated. So we know that there is interdepartmental transfer and the profit component is present in each of the transfer. So if these goods which have been transferred is lying in the closing stock of the department, then there will be unrealized profit in that closing stock. So from that, the unrealized profit component should be separated. So they are saying that the departmental managers should get a 10% commission. A 10% commission should be charged on net profit after subtracting these unrealized profit. So let's read the question, remaining questions, and then we will explain it properly. Departmental profits after charging managers commission. All these sentences are really very important. You have to read it 2 or 3 times to get the proper meaning. So the departmental profits after charging managers commission but before adjustment of unrealized profits are below. So these are the departmental profits after charging the 10% commission but before charging the unrealized profit, before subtracting the unrealized profit. It was already said that the 10% commission should be charged on net profits only after subtracting the unrealized profit. But what they have done is directly from the net profit they charged the 10% without subtracting the unrealized profit, and that value is given here. So this is of course incorrect, and the stock lying at different departments, the closing stock of each department is given. So in this closing stock, we know because there is interdepartmental transfer, that too with a profit component, all these closing stock will have some amount of profit component in them. So we have to separate this, we have to subtract it from the original net profit, and then we have to find net profit, and from that we have to charge 10% manager's commission. So let's explain this properly. So as they said, there is interdepartmental transfer. P has transferred goods to S as well as Q. S has transferred goods to P as well as Q, and Q has also transferred goods to P and S, and all these transfer had taken place with a profit component present in them. It is not at the cost price. This sentence, let's take this sentence. This sentence is one of the most important sentences here, that the departmental managers are entitled to 10% commission on net profit subject to unrealized profit on departmental sales being eliminated. In short, what they are telling us to do is, first you will be given a net profit for, let us say, A. A will be the net profit given before commission or before unrealized profit. So what we have to do is, we have to subtract the unrealized profit. The unrealized profit lying in the closing stock for us, let us say B. So first we have to subtract the unrealized profit, and then we will get a value, and from this value we should subtract 10% manager's commission. 10% manager's commission, let us say D, and then this will be the correct value. So this is what the procedure we have to follow. This is how we have to do. But the value which they have given us these values, what they are? They are the departmental profits after charging manager's commission but before adjustment of unrealized profits. That means out of this A, what they have done is directly here they done the 10% manager's commission. First of all, they charged the 10% manager's commission D. They charged it here and reached the value. This value is given in the question, 90,000, 60,000, something like that. This value is given in the question. So we know that this is a wrong method. First we had to subtract B from this, that means the unrealized profit from this, and only after getting the result we should have subtracted this D. But what they did is directly they subtracted the 10% manager's commission, and this is the wrong method. So what we have to do is, as this value is given, so we have to add back this 10% manager's commission, and then we will get the A component, that is A minus D is already given. So if we want to find A, first of all we want to find A. If we get A, then we can reduce, we can subtract the unrealized profit, and from that we can subtract the 10% manager's commission, and we will arrive on the proper or the correct net profit. So we want A. They have given us the A minus D value. A minus D value is given. So if we want A, then we should add back this 10% commission, this D, this 10% commission which they subtracted to the given value, and then we will obtain A. Once we get A, we can follow this procedure which we should do, and we will be there on the answer. So let's prepare the solution. We are going to compute. This is not an account or something. We are preparing a statement for computing the correct departmental accounts. So we are preparing a statement to compute the correct departmental profits. Okay. So what we are doing is the computation of the correct departmental profits. So the particulars: department P, department Q, and department S. This much is given. Okay. So in this question, we know the incorrect departmental profits has been given. Incorrect in the sense because they have been directly charged 10% manager's commission. We know that it shouldn't be like that. First we had to subtract the unrealized profit, but here they charged the 10% commission directly. So this value is incorrect. We know. So first let's take it into the question. Incorrect profit after charging manager's commission. This is not a basic wordings or something which you have to follow as it is. You can write as per your convenience. It should have some meaning, that's it. So incorrect profit after charging the manager's commission is given in the question, and it's 90,000, 60,000 and 45,000. 90,000, 60,000 and 45,000. So as I said, the value after subtracting, that is A minus D, the value after subtracting the 10% manager's commission from the original net profit is given. So once if we want to obtain the original net profit, we have to add back the deducted 10% amount. We have to add back the deducted 10% manager's commission. 10% manager's commission needed to be added back. But we don't know how much is the manager's commission in each case, right? We don't know. So what we have to do is, let us assume, for example, as I said, A minus D. A means the original net profit, D is the 10% manager's commission, and the value after subtracting the 10% manager's commission, let's say, okay, X is given. So X is given, And now let us assume A is 100. Let us assume A to be 100 and this 10% manager's commission. The manager's commission D is 10%. So the value which we obtain after deducting this 10% from A will be 90. Right. So the profit after charging this 10% commission will be 90. This 90th portion is given in the question. 90,000 in case of department P and it is in case of department S. Okay, here it is department S and here it is department Q. That's the way given in the question. I have written the ulta. Here 60,000, 40,000. Now it's okay. Okay, so we are assuming that A, the original net profit is 100 and if we deduct the 10% manager's commission, the amount which we obtain will be the 90 and the 90th portion is given in the question as 90,000 in case of department P, 60,000 in case of department S and 45,000 in case of department Q. So if 90th portion is 90,000, then what will be the 10th portion? We know, just do a cross multiplication and you will be there on the answer. 90,000 into 10 divided by 90. So I hope you understood this calculation. We are just assuming that the original profit is 100. Then if the original profit is 100, then the 10% manager's commission, if we reduce, the value which we'll get is the 90. And this 90th portion is given in the question. So if 90th portion is given, it is easy to find out the 10th portion. So calculate and you will get the manager's commission in case of department P will be 10,000 and in case of department S will be 6,667 and in case of department Q it will be 5,000. This will be the value which we obtain once we add back the manager's commission. So we got the original profit. We have got the original profit. 1,66,667 and 50,000. So we are there on the A portion. If we show here, we are there on the A portion. Once we get the A portion, we said we should subtract the unrealized profits first and then we will obtain an amount, and from that we should subtract the 10% manager's commission and we will be there on the right or the correct departmental profits. So now from this A part we have to subtract the unrealized profit and we don't know how much is the unrealized profit. First let's unrealized profits. Now it gives time for the calculation. So we don't know how much is the unrealized profits and now it's time to find out how much is the unrealized profits. So we are writing a working note number 1. So we are calculating unrealized profits. There are 3 departments. So unrealized profit in department P, unrealized profit in department S and unrealized profit in department Q. So they are transferring goods to 3 departments, department P, department S and department Q. So it's already given in the question that the stock lying in different departments. Transfer from P 18,000 and 40,000. So P has transferred goods to S and Q 18,000 and 40,000. So department P has transferred goods to department S and department Q. So P has transferred goods to department S for unrealized profits of department P. So unrealized profit of department P in department S and in department Q. So P has transferred goods worth 18,000 to department S and 14,000 to department Q. And department S had transferred goods worth 48,000 and 38,000 respectively. 48,000 for department P and 38,000 for department Q. So department Q has transferred 12,000 and 8,000. 12,000 and 8,000. So P has transferred goods to S and Q, this value, and this both these values contains the profit component. So we have to find out how much is the profit hidden in each of these cases. So the department P, it's given in the question. Let's read the first part of the question now. So the department P is selling goods to department S at a profit of 25% on cost and to department Q at a profit of 15% on cost. So this is something which is important to be noted. So they have given that department P is transferring goods to department S at 25% on cost. But this 18,000 is not the cost. It includes the profit element and it is the selling price. It is not the cost price. And the profit is 25% on cost. We cannot calculate direct 25% on these 18,000 because it will be 25% on sales. It will become 25% on sales and it will be wrong. They have given that it is 25% on cost. Now what we have to do is we have to convert this into on sales. When it is given in the cost, we have the sales value. So we have to convert this percentage into sales. For this, there is a short memory trick or a short technique which we can say, that is 25 by 100. 25% on cost in the sense 25 by 100 on cost. We know that we have to convert it into sales. So we know that cost plus profit is the sales. Cost plus profit is the sales price. We know so. So what we have to do is add profit. We have to add profit to the cost to get the sales price. So 25 by 100 is there. And now while we convert, as I said, we should add. So 25 divided by 125 will be the value on sales. This will be the ratio. If it is 25% on cost, then it will be 25 by 125 on sales. I hope you understood. One more example I will give you. If it is given 25% on sales, if it is given 25% on sales and we have to, if we have in our hands the cost price, so we have to convert this ratio into cost. We have to convert into cost. So we know that from sales we have to reduce profit to obtain cost, minus sign. So we have to reduce profit. The numerator will be as it is. The denominator is the place where the change occurs. What we have to do is reduce. So 100 minus the numerator, denominator minus numerator, 75. 25 by 75 on cost. This is a short technique on how to do the conversions. I hope you understood. Let it be there. So I hope you understood. If you want, once we do these questions, you will understand. I don't think there is much examples needed. Now let's go into the question and you will understand. So department P is selling goods to department S at a profit of 25% on cost. 25 by 100 on cost. So cost, we should add profit to reach on sales. So adding means 25 by 125 on sales and we will get the profit component in department S. Next, to department Q, the goods were sold at 15% on cost. Department P sells goods to department Q at a profit of 15% on cost. So 15% on cost. This is the selling price. So from cost to selling price, we have to add the profit. So 115. Addition takes place. This is the way. The next point. Where it is, yeah, this is. So department S sells goods to P and Q at a profit of 20% and 30% on sales respectively. So here it is on sales itself. We know the selling price is given and this percentage is on the selling price itself. So there is no much calculations needed. Just apply this 20% and 30% directly. And the next information is department Q sells goods to P and S at 20% and 10% profit on cost. Profit on cost. So 20% profit on cost. We have to convert to sales. We have to add 120. 10% similarly 110. So we calculate it and then we will be there on the value. So let's calculate how much is the value. 18,000 into 25 by 125 will be 3,600. 3,600. 14,000 into 15 by 115 will be 1826, 1,826. 38,000 into 30 percentage, 11,400. 48,000 into 20 percentage will be 9,600. Again here 12,000 into 20 by 120 will be 2,000, and 8,000 into 10 by 110 will be 727. So these are the values. I hope you understood. So we have obtained the values, and now let's take it into the statement. So the unrealized profit of Department P in the hands of Department S and Department Q. So the total unrealized profit of Department P is 3,600 plus 1826. How much? 3,600 plus 1826 is 5426. And the unrealized profits of Department ES is 11,400 plus 9,600, which is 21,000. 5426, 21,000, and here 2727. So let's take it into the statement which we had already prepared. Unrealized profits in case of Department P was 5426, 21,000, 2727. So these were the values, I think. PSQ, yeah. PSQ, yeah. These are the values. So we have got the unrealized profit, and now we subtract these unrealized profit from the net profit, and we get the profit before charging manager's commission. Profit before charging manager's commission. So the profit before charging manager's commission is 94,574, 45,667, 47,273, and now we subtract the 10% departmental profit A, the original net profit A. From that it's the incorrect profit X. To that we added back D, and we got the original net profit A. And from A we subtracted B, we got C, and now from C we subtracted D, and now we reaches E. So the 10% manager's commission is being subtracted. So 10% means 945745674727. These are being subtracted, and now we will get the actual value. We will get the actual net profit value. Profit after charging manager's commission, and the values are 85,117, 41,100, and 42,546. So let's confirm this. 85,117, 41,100, and 42,546. So I hope you people understood this. This was very simple. It was specifically said in the question that from the net profit, first unrealized profit should be subtracted, and only after that 10% manager's commission should be charged. However, they had given us a profit in which this 10% manager's commission was directly charged. So what we done is we added back the subtracted manager's commission, and we found out the original profit, and from that we subtracted the unrealized profit, and then we got the value from which we subtracted the 10% manager's commission. This was all the thing, and the only difficulty or only some confusion was in the place where we had to find out these unrealized profit and the adding back of manager's commission. We had to assume that 190th portion and that all, and the unrealized profit also, it was a bit of confusion because of 25% on cost, on sales, all those confusions was there. Other than that, everything was just simple. So I hope you understood this question. If you have any queries, feel free to comment. So thanks for watching. Bye.